Hey, it's CG with quiet cash flow. Most people think you need multiple stocks in order to benefit from selling options. The truth is, you only need one stock. Most importantly, one strategy. As long as you understand how that company moves, know the stock, and is willing to hold it long term, you have a winning formula. In fact, I'm going to show you how I've been making hundreds of dollars every single month on one stock, even without it rising in price. This is CG with quiet cash flow. And on this channel, we don't give fluff, nor do we do clickbait. We give proven strategies with clear execution. Allow me to show you how. One of the companies that has been great in terms of selling options is SOFI Technologies. If you're unfamiliar with SOFI, think of them as like the American Express of fintech. Anyone who's inside the American Express ecosystem, you know that it's very difficult to get you out once they pull you in, because as a lender, they have so many different tricks and ways to, make your life so comfortable when you're out dealing with one of their products. If you run into any issues, that's the hold effect that American Express have on their consumers, unlike other companies. Now with SOFI Technologies, as far as banking, it's very similar because it's a one-stop shop for all your financial needs. So they have earnings coming up this week. And anyone who's been in the stock know for the past 4 to 5 months, they've traded in a straight pattern going up and down. They haven't really moved in the past 4 to 5 months. So let me show you what I mean by that. So as you can see, over the past year, they're up 40%. So they're doing great as far as the stock itself is concerned. But if you're selling options on the stock, as you can see, this stock in September, it went almost up to $30 a share. Then it came down, to 25, and it's been trading inside that range. And so if we was to go to the advanced setting inside Robinhood, the biggest advantage you have when you're selling options is Bollinger Bands. A lot of different people use so many different metrics for doing options, but for selling options, Bollinger Bands is your friend. If you look at the top of these bands, it tells you that people are willing to part with the stock in the $30 to $31 range, and they're willing to not let the stock fall below $25. So every time it gets to $25, buyers are stepping in and say, hey, I want some more SOFI. So what I've done is every time it got to $29, I start selling covered calls on the stock. And what that looks like is that it'll get to $29. I will sell a covered call, let's say about $2 out. So I will sell it about $31. And when I sell $2 out, I will receive about $1.27 or maybe like $1.25 per share. So we're looking at, I usually do it with about a couple hundred shares of SOFI. I have a lot more than that, but I'm willing to sell covered calls and release a couple hundred shares if in the event, the shares have to get called away from me. And so as you can see from the Bollinger Bands, it went up to 29 September 22nd. So I'm selling covered calls here. Then I'm selling them here. Then I'm selling them here. So I've repeated this pattern about 4 to 5 times over these past 4 months. I made about $1,000 just on those shares alone. And so the average person, they're holding SOFI. They're frustrated because every time it gets high, they think the stock is going to continue to go higher, and it falls back down because of these trading patterns. And so that's the beauty in selling options. You're making money when the stock is not going nowhere. And so now the question becomes, what do I do with SOFI as a stock from an options standpoint, considering that earnings is approaching this week, and SOFI has been hit again and is back down to that $25 range. So I stick with my core principles. I only sell covered calls on this stock once it reaches the top of the Bollinger Band. So if it was to get back up to $28 or $29, then I would sell options $2 out and receive a couple $100 for next month. If it does not reach the top of those bands, I just sit back and I wait and I see what earnings is going to do. And the reason why is because I could receive a couple $100 selling covered calls now within this range, but I have a feeling that SOFI is going to have a great earnings, and if it does, then this stock, it could jump, 8 to 10%. So I will be selling myself short by releasing the shares at $27.
when the stock has already proven it could reach $31. It's done that about 4 to 5 times. So I would rather wait until the stock reached closer to the top of the Bollinger Band, let's say at $29. Then I sell a covered call at, let's say, $31. And at that point, I'm telling the stock, prove to me that you can reach $34, $35. And if it does, then I'm okay with releasing the shares. The difference between where the stock sits now, 25.85 and 31, that's about $5. If we're talking about $5 times 200, that's $1,000 to get those shares called away. Plus the strike price of $1.25 times 200. So we're looking at about $12.50, if the stock was to do that and I get the shares called away. If we look at the return on that, because the shares now are worth about $5,000. So $12.50 divided by 5,000, that's a 25% return in less than a week if that was to happen. This is why I don't care about those shares being called away, plus me having more shares of SOFI anyway. Now, if the stock was to do the opposite and it was to retreat on earnings, then I'm okay with that as well, because for one, I know that I'm buying a great company, or I've bought a great company, and now I just have to hold the shares because it's one of my long-term holds anyway. So that's how you have to think about this. But the average person who's not doing this and they just hold shares of SOFI, they are frustrated because they've been holding the stock for about 5 months and the stock has pretty much gone nowhere because it's been up and down, as you can see. And the reason this is so necessary is because the stock market is more psychological than it is strategy. So when you're in a stock like SOFI and the stock has went nowhere for the past 4 to 5 months, you're going to want to sell. And more than likely, you're going to sell at the wrong time. So that's why this size strategy is so necessary, because you're generating income while the stock is sitting nowhere. And most importantly, you're protecting your psyche. I always say that the most successful investors, they play both sides of the trade. They don't leave any room for open gaps. So yes, you have your long-term stocks, but you also have your short-term, income from selling covered calls until these stocks really get rolling again. So I hope this helped. Let me know if you're doing anything similar on SOFI or for any stock for that matter. Stay quiet, allow your cash flow to compound, and I'll see you guys on the market.